Let's start with the day's market action. Sensex and Nifty hit the highest level in 10 months as earnings season draws to a close. Bank stocks led the rally with the Nifty Bank Index ending at a record closing high. In the currency market, the rupee traded in a narrow band against the dollar. Indian currency continues to hold its ground against the greenback amid easing crude prices and upbeat domestic stock markets. As things stand, $1 continues to cost more than 82 rupees. Chief Economic Advisor Anant Nageshwaran said India needs to use forex reserves judiciously to ensure it has some firepower left for 2023 as well.
We should, in the short run, allow the rupee to depreciate gradually, and we should use foreign exchange reserves judiciously, keeping the firepower for 2023 as well.
India's Chief Economic Advisor Anant Nageshwaran was speaking at the annual session with the Indian Chamber of Commerce. Citing latest data, he said the production-linked incentive scheme is yet to pick up steam across all sectors. CA said only pharma, mobile phones have done well so far.
The PLI schemes were announced in 2020 and 21, but there is going to be more expansion and more likely to grow momentum. Right now, it is happening in 2 or 3 areas: mobile phones, pharmaceuticals, as well as chemicals, but it has to pick up steam in other areas as well, and hopefully in the next 2 years it will happen.
The CEA was citing data from the DPIIT as of September this year. The data shows pharmaceutical drug manufacturing has achieved 107% of the investment target that the government had envisaged. However, only 13% of the employment target has been realized. So far, the other relative outperformers are also linked to pharma, with active pharma ingredients and medical devices faring better than some of the other sectors on both parameters. Mobile phone manufacturing has realized 38% of the investment target, but only 5% of the employment target. Food products sector, meanwhile, has achieved 54% of the investment target and 49% of the employment target. It must be noted that pharma PLI schemes were among the first off the blocks as it was launched in 2020. In sharp contrast, electronics PLI, which was launched in April 2020, has achieved less than 5% of the stated investment target and less than 0.5% of its employment target of the PLI schemes launched in 2021. Specialty steel, automobiles, drones and their components have not seen any investment so far. White goods PLI scheme has seen 13% of its investment goal being met and 16% of its employment target. However, 2 schemes launched in 2022 have seen some traction. Solar panels have seen 27% investment and 8.5% of the employment target achieved so far. Textile PLI has also seen about 7% of its investment goal being met, though no employment under the scheme has been generated so far. And as the earnings draw to a close, PSU banks have stood out. All the 12 state-run banks reported a profit in Q2 with a combined growth in profit at more than 50%. Asset quality also improved with GNPA declining by nearly 16%. In fact, Finance Minister Nirmala Sitharaman tweeted that government's efforts to reduce NPAs and strengthening the health of public sector banks is showing tangible results. Abhishek Kothari is here with the PSU Bank report card.
Well, Q2 FY23 has been an operationally strong quarter for the PSU banks. The loan growth has been pretty robust at above 19% YOY and about close to 5% sequentially, which means that they have gained market share both YOY and quarter on quarter. So the operating profit growth is very healthy at 18% YOY and about 32.1% sequentially, largely led by the fact, net interest margin has expanded for majority of these PSU banks on a sequential basis, and the trading losses that they had in Q1 has actually reversed for many of them. So PAT is up about 50.4% YOY and about 65.7% sequentially. While the operating profits are healthy, the declining credit costs have actually helped the earnings momentum for PSU banks. So the return on advances that I've calculated is at about 1.35%, up from 0.85% in the previous quarter and up from 1.07% in the same quarter last last year. In absolute value, their gross NPA is down 15.9% YOY and about 13% sequentially, and their net NPA is down about 29.3% YOY and 13% sequentially. So calculation does show that, the gross NPA ratio is now at 6.5% when compared to 7.5% in the previous quarter, and the net NPA ratio is at 1.65% when compared to around 2% in the previous quarter. So overall, the core provision coverage ratio has also strengthened by 120 basis points on a sequential basis. Back to you.
All right, thanks, Abhishek, for joining us. In the earnings space, PB Fintech saw its losses narrow to 184 crores rupees in the second quarter of the fiscal. The parent company of Policy Bazaar and Paisa Bazaar saw its revenue more than double on a year-on-year basis. Top international story now. Chaos and uncertainty continues to loom over Elon Musk's led Twitter. The company announced that users will have to pay $8 to subscribe to Twitter Blue, and reports say the company will officially launch the update after the US midterm elections. As things stand, Twitter Blue subscriptions will go live in the US, UK, Australia, New Zealand and Canada. But these are not the only changes that have been made to the app. Reports say some employees that were laid off are not being recalled. Ritu Singh joins us now with the latest details and developments.
Well, updates coming in thick and fast in the world of Twitter. So let me bring you up to speed with some of the recent developments. Number one, remember last week Twitter had laid off almost half of its workforce. But now a Bloomberg report suggests that the company is recalling at least a dozen of the employees, which it said were fired by mistake. And it realized that they are essential to build some of the features that have been promised in Twitter. Number two, the $8 for verification of blue tick debate that rages on, with several people, including the likes of Mark Cuban, suggesting to Elon Musk that exceptions be made. But for now, the stand is very clear from Elon Musk, who says if you want a verification, $8 is what you will have to cough up. Number three, there are new rules for suspension because comedy doesn't seem to be so legal on Twitter anymore. A lot of parody accounts have been suspended, and Elon Musk has clearly stated that if you change your name on Twitter, the verification will be temporarily suspended. And if handles are impersonating other people without saying their parody accounts, they will also face a permanent suspension as well. New features also being rolled out on Twitter. For instance, it'll soon give users the ability to attach long-form text to tweets. And secondly, there will be more content monetization for all sorts of creators. And lastly, in response to a question on when Twitter Blue will be rolled out in India, Elon Musk responded saying hopefully within a month's time.
All right, thanks Ritu Singh for joining us. So lots changing in Twitter every day and some of the decisions being rolled back as well. The government, meanwhile, is not really concerned about whether or not Twitter charges a $8 subscription fee as long as they comply with the law of the land. This is what Minister of State for Electronics and IT, Rajiv Chandrasekhar, told my colleague Ashmit Kumar.
If he wants to make Twitter less relevant in India, have a smaller audience, that is his choice. So I don't think, and from my limited understanding, it's not like he's on my speed dial or I know him well or any of that. I don't think he's saying that people will not have free access to internet. He's only saying that the verified access will be a blue tick access for which he will charge a premium. But that doesn't bother me, and I don't want to get into the race of being, the sound bites on his tweet and I'll retweet and then somebody else will tweet. I don't think our government is into that.
And Twitter employees are not alone, unfortunately. Even Meta is planning to cut its workforce by a significant number. According to the Wall Street Journal, parent Meta is likely to begin large-scale layoffs starting Wednesday. The move is expected to impact thousands of employees and mark the first major retrenchment drive in Meta's history. Production of iPhones has taken a hit after the largest Foxconn factory in China was locked down due to rise in COVID cases. Apple has also warned its customers longer wait times when ordering devices. China's zero COVID has also forced schools in Beijing to shut down. This comes after daily infections hit the highest level in over 6 months across China. Eunice Yoon brings us the latest. Eunice.
Foxconn, which is the Apple supplier that has been handling a very difficult situation for itself at its iPhone factory here in China, or at least one of the major ones, said that it's going to revise down its Q4 forecast. This is traditionally a very important time for the Taiwanese company. However, it said that it was going to have to do so because of the COVID curbs. Even so, they said that it's trying to manage the fallout as best it can. In a statement, Foxconn said it's working with the government to resume full capacity as quickly as possible. Now, that means to improve the conditions at the factory to make sure that it's just much more livable for people who have to work and live there. Also, they said that they're going to be ramping up a recruitment drive. So Foxconn says that they're going to be reorganizing the facilities to further restrict the movement between the factory and the dorms. They're also offering one-time bonuses for anybody who wants to return to the factory in order to try to ramp up what they're seeing as a worker shortage there. And they're also, of course, trying to encourage more people, new workers, into the plant by offering a salary hike of 20%.
And back home, the Supreme Court has upheld the 10% reservation in government jobs and educational institutions for economically weaker sections of society in a 3-2 split verdict. The court held that the 10% quota does not violate Constitution's basic structure by taking economic criteria in account. So what essentially constitutes the economically weaker sections? Those not from the SC, ST or OBC community and with an annual family income below 8 lakh rupees may be eligible. The centre had earlier told the Supreme Court that 8 lakh is a reasonable threshold. Ashmit Kumar and Abhishek Datta Roy explained the ramifications and reactions to this landmark verdict.
In a decision that could have major political ramifications, the Supreme Court today upheld the constitutional validity of the 103rd Amendment that grants 10% reservation in government jobs and public and private educational institutions to economically weaker sections among non-scheduled caste and scheduled tribes. A 3-2 split verdict by the Supreme Court upheld the validity of the amendment, which had come into effect in January 2019, months before the Lok Sabha elections. However, the court also observed that reservations cannot continue indefinitely and should be revisited for a casteless, classless society. A slew of petitions had challenged the amendment on the ground that it propagated the principle of exclusion. Petitioners argued that economic classification cannot be the sole basis for reservation. The petitions were referred to a 5-judge constitution bench in August of 2020. Chief Justice U. Lalit and Justice Bhatt dissented. He held that the 10% quota is violative of the Constitution of India. Justice Bhatt held that excluding the SC, ST, OBC community from the EWS is violative of basic structure of the Constitution. However, their views did not have a bearing on the overall judgment. Justice Bhatt even went to the extent of quoting Swami Vivekananda, saying, "If anyone dreams of exclusive survival of own religion and destruction of others, I pity him." End quote. The Bharatiya Janata Party and Congress have welcomed the Supreme Court judgment. The Tamil Nadu Chief Minister M.K. Stalin-led DMK, which was one of the parties in the case, however, has termed the judgment as a setback to the century-old fight for social justice. Stalin said that they would consult legal experts to chart out the next course of action. The centre has already justified an annual income of 8 lakh rupees as the threshold for the EWS quota. Well, legal experts are calling this a landmark verdict that will have a bearing on the dynamics of both caste as well as class. However, there are still two issues that need to be considered. Number one, states such as the state of Tamil Nadu are dead opposed to the implementation of the EWS quota. Therefore, that raises the question of the execution and the implementation of this quota on the ground. Number two, the Supreme Court has raised the broader question of whether or not reservations are at all required, saying that reservation is not an end in itself, rather a means to an end, and therefore raising the question on whether or not there should be a timeline for phasing out reservation altogether, and in doing so, sparking a much larger debate. In New Delhi, Ashmit Kumar.
And time for a short break, but coming up, Himachal Pradesh elections are just around the corner. What are issues faced by apple farmers in the state? A special report on the other side.